What's up, millennials? Doximity is called the Facebook or LinkedIn of the healthcare providers. So will Doximity become the Teladoc killer? Earlier today I did a live stream where I did live research for Doximity, currently trading as the DOCS stock. In this video we're going to go over an introduction for Doximity, their mission, founders, business model, valuation, and much more, so let's do it. The company Doximity was founded in the year 2011 and they had their IPO a few trading days ago on Thursday, June 24th, when they went public at $26 per share, and currently they are already more than double that. They are currently trading at $55.84, that is, so more than double of the IPO price. And there is a very interesting thing about the IPO of Doximity, because there were 3.5 million shares that were allocated to the physicians that are on the Doximity network, which was 15% of the IPO offering. So that was allocated to the doctors on the platform. So in total, there were 10,000 doctors of the platform that now own up to about $200 million in shares. If we then check out their mission, we can see that they are wanting to help physicians to be more productive and to provide better care for their patients. And also they say that we are physicians first, putting technology to work for doctors instead of the other way around. So their focus is definitely on the physicians. Now, if you look at Teladoc, for example, they say we are empowering people everywhere to live their healthiest lives. So there the focus is more on patients instead of physicians. And Doximity's mission is already working out pretty well, because we can see that 80% of the American physicians in the United States across all states and also in every medical specialty have now joined the Doximity platform. These are 1.8 million medical professional members. And we can also see that they already had 63 million telehealth visits, and if we scroll down a little bit to the revenue growth, we can see that they are growing almost exponentially, it seems, especially in the last year, 2021 versus 2020, and keep in mind their fiscal year is slightly different to the calendar year. So for the fiscal year 2021, they had a 78% growth year over year versus 2020. So the revenue for 2020 was 116 million, and for 2021, again, the fiscal year 2021 was $207 million. Now do keep in mind the impact of COVID, of course, so that is definitely going to add a little bit of revenue for Doximity, very likely, but I do believe that the growth is going to continue in the next couple of years. So where does all that growth come from exactly? Well, I believe this has to do with the network effect of Doximity, and therefore they are also called the Facebook or the LinkedIn of the telehealth providers or healthcare providers even. And according to the Motley Fool, this exactly seems to be the mode, the network effect. And they don't even need to pay that much for advertising, because the thing is, the doctors on the platform already are promoting the products within their own practitioner networks. And that is the way you get that network effect. The CEO of this company, Doximity, was also not focused on revenue, but he wanted to try and build a big base of engaged users with the hope that money would eventually flow. And that has definitely been the case so far. If we then look at the team behind Doximity, we can see that there are 3 co-founders going on. We can see the co-founder and CEO, Jeff Tangney, and if you look over here, we can see that he was also, apart from being the CEO of the current company, he was also a healthcare investment analyst at Goldman Sachs. So I think he very likely knows a thing or two about how investors are valuing companies, for example. And also keep in mind, by the way, that this CEO owns $2.9 billion stake in the company right now. Apart from Jeff, the CEO, we have 2 more people, 2 more co-founders. First of all, Sherry Buck, she is also the Senior Vice President of People and Operations, and Nate Gross, he is also co-founder, but also the Chief Strategy Officer. It also seems that people who are working at Doximity seem to like working at this company, and they also seem to like their CEO and co-founders, because this company, Doximity, gets a Glassdoor rating of 4.7 out of 5, which is one of the highest scores that this author on Seeking Alpha has ever seen for a public company. So where does the revenue of Doximity come from exactly? Well, they basically have 3 sources of revenue, and the biggest one is the following. They offer marketing solutions to healthcare providers. What does that mean? Well, the healthcare providers can put their products and their services on the Doximity network, and then Doximity is going to market those products and services to the patients. The patients, of course, pay for these products and services, and then Doximity gets paid by the healthcare providers to market promote these products and services. Another source of revenue is the hiring solutions that they have on their platform. Looks a little bit like LinkedIn for doctors, and they also have a telehealth solution that is a little bit like Shopify, which helps healthcare providers to digitize their products and services. But again, the majority of the revenue comes from the marketing solutions. About 80% of the revenue is from these marketing solutions, which in other words are basically fees that are paid primarily by pharmaceutical companies to push out advertising campaigns to get their information in front of doctors. Doximity also has a very high net revenue retention rate of 153%, which basically means that customers keep spending more and more at Doximity over time. So let's then take a quick look at the revenue and the costs of operations of Doximity. First of all, in the fiscal year 2021, they had about $207 million in revenue, and the cost of revenue was slightly only $31.2 million. So that is going to give you a gross profit of about $175.7 million, and that is going to give you a gross margin of 85%, which is very, very high actually. If you look at the operating expenses, we can see that about $44 million was spent on research and development. This is about 21% of the revenue of 2021. Then about 62% or 62 million, was spent on sales and marketing. This was about 30% of the revenue. And then $16.5 million was spent on general and administrative costs, which was about 8% of the revenue. And if we scroll down a little bit, we can see that something very interesting is happening over here. They have a positive net income. So that means that this company, Doximity, is already profitable. If we then go over exactly the same numbers for Teladoc, we see a kind of a different picture over here. We do see a high revenue of about $1.1 billion. Then we can see the cost of revenue, $390 million. So that is going to give you a gross margin of 64%, which is way lower than Doximity's gross margin of 85%. And then the operating expenses, $226 million was spent on advertising and marketing, also $154 million spent on sales. So in total, that means that about 35% of the revenue was spent on sales and marketing versus the 30% of Doximity. So that means that Teladoc is spending more on sales and marketing. If you look at R&D, the research and development, here they spent about 15% of the revenue on research and development at Teladoc versus the 21% at Doximity. So Doximity is spending more on research and development too. And if we take a look at the general and administrative costs, there's a very, very big difference between Teladoc and Doximity. Teladoc is spending about 46% of the revenue on general and administrative costs, and Doximity is only spending about 8% of their revenue on those costs. So Teladoc is definitely spending way more there. And again, here, if we scroll down a little bit to the net loss, we can see that Teladoc has a very negative net income, so definitely not profitable yet. Then the valuation, because that is very important as well, because let's take a look at the revenue and the valuation, the price to sales ratio of both of these companies, of Doximity and Teladoc. Well, let's start off with Doximity. As we said, they had about $207 million in revenue in last year, or well, fiscal year 2021, and their market cap right now is about $10 billion at $56 per share. So with a market cap of 10 billion and a revenue of 277 million, then the price to sales ratio becomes 48, which is very, very high actually. And if we go to Teladoc, we can see that the revenue again was about $1.1 billion. They have a market cap of 26.4 billion at $170 per share. So that means the price to sales ratio with a market cap of 26.4 billion and a revenue of 1.1 billion, the price to sales ratio becomes 24. So based on these price to sales ratios, Teladoc is 2 times as cheap compared to Doximity right now. Then with regards to the cash position of Doximity, we can see that they already had $142 million in cash on their balance sheet, and they raised with the IPO about $500 million in additionally. So now they have already more than $600 million in cash in total. But since Doximity is a profitable company already, they are not going to burn through all of this cash. So what are they going to use the cash for? Well, Doximity says they are going to simply use it for working capital and also for growth. Now, on the one hand, they might acquire other companies or products and services from other companies, but I also think that they are going to expand their services abroad outside of the United States. Because right now they are already very well present in the United States because, as we said before in this video, 80% of the American physicians in the United States are already part of the Doximity network. So I do believe that at some point they are going to go abroad to other countries to use their services too, and to promote their platform to the physicians in those countries. So in general, Doximity, the story is pretty good, but is this the Teladoc killer? Well, the thing is, Teladoc is for sure struggling a lot with gaining traction in terms of membership growth and profitability. We do know that the number of US paid members at Teladoc on the Teladoc platform has not grown any significant traction over the last 4 quarters, hovering still around 50 million paid members. But the Teladoc bulls might say, yes, we are not profitable yet, but we are foregoing the profitability for future growth because we are going to grow way more in the future. So let's say if that is actually going to be the case in the next couple of years. So is there even a fight between Teladoc and Doximity? Well, personally, I don't see it that way because Teladoc is focusing a lot on patients, Doximity is focusing a lot on physicians. Teladoc gets its money from patient visits and Doximity gets its money from healthcare providers. So I believe the two companies are actually complementary. Now, if you look at the financials of both companies, like the revenue and the costs of operations, for example, I like Doximity a lot more versus Teladoc. But if you look at the valuation of these both companies, then Teladoc's price to sales ratio is way cheaper versus Doximity's price to sales ratio. So if you want to get into the Doximity stock, you might maybe want to wait until it comes down a little bit more, until the valuation becomes a little bit more attractive. But of course, this is not financial advice. So I'm very much looking forward to hearing from you as well. Do you believe that Doximity is the Teladoc killer, or do you think both companies can complement each other? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!